Hey everybody, happy Friday. Welcome to the Pulver Report. Let's go ahead and get started. Let me see if this is coming through loud and clear or if I am missing something. Looks like we are good to go. All right, let me go ahead and show the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. You know the deal. We have non-farm payroll today. That was the point of today's Pulver Report, so let's get to it. I'll bring up the social stuff in a little bit. Let's get right into the trading. Hey everybody, happy Friday. We'll take a look at the currency strength chart. Nice to see everybody. I have the YouTube page up, so go ahead and drop those comments in. It's coming through loud and clear. All right. Don in the house. Tom is here. David here. Chris and Andrew. Denise, good morning. Wayne, good morning. Loud and clear. Good, good, good. Nice to see everybody. Okay, so pretty amazing week in Forex. We had a big old pop in the euro. And I think the euro is going to continue. In fact, the euro Swiss is sitting at 105.73. We are creeping up with a high just off of the 106 handle. We're creeping up to the yearly pivot at 106.18. We're creeping up into this pocket around 106.40. And that is kind of my target one. At the same time, I don't mind looking at holding this a little bit longer if we have a 1, 2, 3... wave move on the Euro Swiss. So that's been a trade I've been focused on for a while. Traders in my flex room know that. And it's been really nice to see, well, kind of out of nowhere, tons of volatility on the Euro pairs. So we'll see if this gets faded a little bit. I'm still going to buy some dips on the Euro Swiss until that that yearly pivot is hit. But today we're here for CAD news, non-farm payroll. So if you have the numbers, let's check in on old financial juice here. And let's see what we have. So number-wise, we have 467 for the U.S. and forecast was 125, so that's way above expected. If we go into Forex Factory refresh, I want to see Canada was predicting like a negative 111. That was forecasted up to 121. Well, I should say down to negative 121. They came in negative 200. So that's pretty big miss on Canada's side, plus a 0.2 increase in the unemployment. So CAD's not doing too hot there. And then average earnings for the U.S. revised down, but actual today was up to 0.7. So we have a mix on the hourly earnings. Obviously, today's number beat the expected. And then a big print for jobs, better than expected at 467. This was revised down all week. I saw like 145, 125. Now we're seeing here 110 on the calendar. Came in 467. 510 was the revision from 199. That's a major change in non-farm payroll. So we have some pretty wacky numbers coming out here this morning. And then our unemployment rate went up 0.1% to 4.0. So let's check in about 1 minute. I'd like to see what the real-time currency strength is giving us. And non-farm improves labor force participation at 62.2 above expected. Okay, that's good. Canada loses 200K versus median forecast of 117. Average hourly earnings came in 0.7 above expected. Yes. Okay. So we'll see how this shakes out. Like I said, I want to see what the live currency strength chart is giving us. So let me go to yesterday, which, like I said, yesterday's currency strength was pretty interesting because it was all euro. This is yesterday. So big jump on the euro. I know in the trade group we are long on euro pound. I just closed out, in fact, on euro pound for some profit. I think that was up close to 80 pips. Maybe we got over 100 pips. Let me see what that closed out at with Telegram. I closed out with 80 pips, 79.6 pips on the euro pound. And I closed that out. I turned off my my robot. I have Wave Rider running on euro pound, and that was in. We had a monthly pivot at 84.60. That alarm went off at 5 a.m. this morning. So when I woke up, it wasn't at 5 a.m., but when I woke up, I saw that alert, check price, and I closed it out around 84.53, which is right at that 84.60 pivot. So anyway, out of that euro pound, I'm still long on euro dollar. I'm still long on euro Swiss. And the euro just is hopefully going to have a nice little run to the upside, and perhaps it is a little bit of a squeeze. Today's price action, we have the dollar getting stronger right out of the gate, so that's going to pull back on the euro dollar a little bit, which is fine. We'll take a look at that in a second. The Swiss was baseline, still softer than the euro, so I still want to see if the euro can stay strong. What was interesting is going into this morning's trading, euro on the strong side, yen on the strong side, and then the dollar was right there, kind of in a close third place, but the dollar's now getting the run from the noose. So we have CAD dropping, Aussie dropping, New Zealand dropping, Swiss is still baseline, and let's see how this shakes out. So the good thing is dollar Swiss is pumping to the upside, which will help us refill some of those pockets from earlier. Euro dollar will retrace a little bit, but I think we can hopefully see that thing push up towards that yearly pivot. So let's go to the charts. Euro Swiss, I'm going to hold that one out until we hit these pivots and above. Euro dollar, big candle to the upside this week. And like I said, it'll be interesting to see how today's candle closes. Here's the daily chart. So did we come up here like right to the top? 1480 on the euro dollar. Did we come right up to challenge that level? Okay, so the one thing I am noticing is this structure is what we were looking at before. A little channel here where we break. We're looking for a retest, possibly continuation down towards 1.10 on the euro dollar. We didn't get that push to 1.10. So because we had the ECB and multi days to the upside, I'm wondering here if this is a low to high pullback, higher low to higher high, and we still head up towards, we have a really nice cluster, I think. Oh, there, I was looking for that pivot right there. There's a yearly pivot around 1620 on the euro dollar. We also have this beautiful harmonic pattern that comes together off this past support around 1700. It looks something like this. Let's see here. It's like X, A, B, C, D. Well, I can just show you. Here it is on the weekly chart. Okay. All right. So let's go to this workspace. Here is the euro dollar on the weekly chart. So there's the harmonic pattern right there. Right? So this big push to the upside, does it hold? Is this an engulfing candle that allows the euro to continue to stay bid to the upside? We do have some really nice recovery levels. I've been telling traders, the merge is perfect. 1.17 would be awesome. But anything inside this like 1620, let me find that pivot again. Anything inside the 1640 rather. Okay, so 1640, make a note of this here. 1.1640 to 1.1700 is my profit window. If I'm long euro dollar, which I am, that's going to be my profit window. I would love to say I'm going to hang on to it to 1700, but I probably won't. If it gets to 1640, 1650, because I've built my position, on this decline, and I built my position, slowly over time, and I'm looking for this to bounce off of 1.10. I just didn't get that buy trade there. But I have been holding long, and the levels I look to trade back to are right here inside that window. So to me, anything above 1640 is good enough, and I'm going to go ahead and start looking to take some profit. I wouldn't be surprised if price does find a way to hit that harmonic merge at 1.17. Okay, so that's a little euro dollar action there. If we go to our other dollar crosses, Aussie dollar, this one's actually been a little slippery. Reason why is, we took a great trade on the euro dollar just recently and closed out for about 200 pips. So right here, we had a nice little trend line break. We were short on that trend line break during an FOMC announcement during that week, which was the last part of January, and we took profit down here below 7,000. I think the low here was 69.66. I'll verify that. This low is 69.67. Okay, I was off by a pip. But we had a low at 69.67. And I was telling traders, look, we took profit. That's good. Now we're getting a pullback. So I was looking to see, could price pull back into this area again, reject off the backside of this channel, maybe even come back and test the highs or test the backside of this trend line channel. And then we end up seeing this go back down below 6,800. So right now where the euro dollar or the Aussie dollar is sitting, I don't have a trade. All right. I've been telling traders this all week in Flex. If we have a chance to sell it here, awesome. If we have a chance to sell it at the backside of this channel, fine. But right in the middle of this, I just didn't get in. So I'm not doing anything right now in Aussie dollar. If it heads back down to the lows, that's okay. I'm still looking at, a big buy zone here back to around 6,700. So if we have a level at 6,700, I'm interested in buying. A level at 74, I'm interested in selling. And then in the middle, not really trading it right now. Okay, so that is Aussie dollar. Euro dollar, like I said, 1640 all the way up to 1700. I'm going to set a chart alarm up above this level at 1488. See if we break these highs. Recent highs, can the euro dollar continue to motor to the upside? We'll find out. We also have some pullbacks and pocket levels, which again makes sense that if we pull back into this pocket, I'll find a price for that. We pull back into this left structure. So this could be a head and shoulders right here. We pull back into that left structure, form a head and shoulders here at the lows around 1300 or 1250. And then we make a way back up to that yearly pivot. We can measure that move. We can trade that symmetry. And we might even have the ability to add to a winning position with a nice little swing on this. So time will tell if it sets up that way. Maybe it's more aggressive than this. Maybe this is, a little bit of interruptive news. And then next week we continue to see euro dollar head to the upside. And it doesn't really change anything. Okay. All right, so we'll take a look at that one. But that pullback level around 1330, equal lows around 1230. So if you're writing that down, 1.1330, 1.1230, those are a couple levels to look at on the euro dollar for some pullbacks. All right, pound US dollar. This one also did not really pull back. Well, I suppose it did. I just didn't sell it. This is another one that we took some sell trades on. We were long on the pound dollar here, took some really nice profit all the way back to 36.50, and then we were short on the pound dollar here. Took some nice profit there, protected that for, I think I can check in my my signals here. Pound dollar, when he closed it, I know it was well over 100 pips. Let me confirm that. So pound US dollar, we closed for 149 pips. Okay, so again, pretty good trade, both to the upside and the downside. And I was looking at, well, perhaps we're going to pull back and find this channel again, look to sell it nice and high, stop loss above, and try to take this back down. So, today, non-farm payroll, it's Friday. I'm probably not going to force a trade on this. A lot of times these non-farm announcements can be really noisy. And I know that, maybe traders are seeing the numbers, are like, oh, that's great for the dollar. It's like, well, let's take a look at all the dollar crosses. Let's look at the dollar index and see where it's at. Because I'm thinking right now the dollar index is sitting right back in the middle of all the noise it had from back in December. New Zealand US dollar will be pushing back down a little bit. This one has room to keep dropping. Okay, and another one that just kind of slipped away. We had a great trade on it right here. We shorted this one. We took some profit. We, plan on a pullback. It actually looks like it just bounced off this month's pivot. But I was looking to see, do we pull back to the same low right here that we could sell it again? It was just shy of that. So I just missed my re-entry for a sell on New Zealand dollar. That's okay, though. I will wait for, and I think this is what we have. We have a channel that's playing out on the New Zealand US dollar, okay? So this channel could play out and take longer, or we have price that's going to drop a lot faster all the way back down here towards 6,200 or 6,250. And then I'm way more interested in buying this one, trying to trade it back up to some efficiencies. All right. But what we have successfully done is we have found the 2021 yearly pivot right there. So that is checked. And then we have this year's pivot right around 7,000 that has not been hit yet. So if there's a way that I could buy the New Zealand dollar all the way down here around 62, I would say between 6,200 and 6,000, I would be willing to build a small position and then take it back up, looking for a run back up towards 7,000. But that remains to be seen. We'll see how this plays out. Let's do a couple more dollar crosses. Denise, looking for a pullback on euro dollar to get back in. Took profits yesterday. Very good. Good. If you took profits, that's awesome. I am still sitting euro dollar overall. Where was that high? 14 and change. My break even's 15.50 on euro dollar. So, and part of that is I just didn't add a ton to it. I do have a couple buy limits on those pullback levels though. So I'll be watching that 13.30, that 12.30 level. If I get pullbacks, I'll add a couple on those euro dollar positions. Yes. And again, I'm still looking for 1640 to 1700. We're going to show the dollar index here in just a moment. So New Zealand dollar, we're good. Okay. Dollar CAD should be a pretty easy trade to the upside. And I've been telling traders this the last couple of weeks. I don't love the dollar CAD. Right? I don't love the dollar CAD, but it has been a structurally sound, technically obedient currency. And I said, as long as you're willing to accept that there is risk below 24.50 where I wouldn't want to hold this trade long, I would rather be long dollar CAD, take it up to the highs, just above 2,900, take it up to a round number like 3,000. There's room all the way back here to this yearly pivot at 3,300 or 3,350. And there's room to potentially hit all the way up here to the top of the channel, right? So the timing of this could be interesting. We'll take a look at oil here in a moment. But again, I don't think, long dollar CAD is a bad play. All right. So, really the only thing that's kept the CAD pretty resilient is oil prices, which yesterday I believe hit $90 and we're sitting at 92.09. So oil continues to run. The narrative of oil hitting $100 is very doable. And I'm not fighting this. I don't think that we should be fighting, commodities right now. I think the oil looks good to the upside. This is helping energy plays. Energy is one of the only sectors that's really performing right now in 2022. And hopefully we're taking advantage of that. So we've played that also in my trading room with equities on demand. We've got a couple expirations for this week and next week and staggered out energy stocks over the next couple of months. Dollar Swiss. Dollar Swiss on the daily. Really nice recovery to the upside. I'm going to take a look at this because I might just scalp some more Dollar Swiss. Let me see where we're at here. So Dollar Swiss is popping back up to the upside. I can probably grab a few pips. That would be, if I let that one go, that would be for about 20 pips on one position. 20 pips on one position, and then another 45 and another 75. So I could get somewhere around, I don't know, maybe 120 pips or so. Excuse me. About 120 pips on the euro, on the Dollar Swiss as a little retracement. But it's not done yet, and that pocket hasn't been hit. And I'm also still going to hold and build my position on the Dollar Swiss longer term, trying to take the Dollar Swiss all the way back to these highs, minimum. Okay, minimum 93.50 or so. And in addition to that, I'm still looking for the euro or the Dollar Swiss to head up into a symmetrical swing based on the weekly chart, which is up here towards 96 and 96.50. So all I've been doing on Dollar Swiss, and traders know this, all I've been doing is accumulating. Okay, I've been accumulating and scalping, taking more, accumulating, scalping, accumulating more, scalping. Eventually, what I'm trying to hold positions, and if we get a break above 93.50, I think that opens this trade up to 96. So I'm trying to play the game of scalping inside here just in case it's up and down, but keeping, you know, my eye on the prize and making sure that I'm still willing to add more positions to the upside as this, you know, to me, the trajectory is going to 9600, 9650. And if we're trading at 92.48, that's another 300 to 400 pips that I could trade, right? 350 to 400 pips that I could be after. So I'm going to stick with the big time frame on that one. What else we have here? SB says, Eurodollar will make the biggest drop as fundamentals are not strong as in the UK. That is totally your opinion. I have seen the Eurodollar do this crap before. If you don't believe me, I mean, look at, here's a perfect example of how, you know, fundamentals in the UK, fundamentals in the Eurozone. Doesn't really matter, okay? Honestly, like, this is a squeeze. I don't know if this is, you know, full on, like, maybe the dollar trades were crowded. Maybe everyone was long the US dollar and this is a way to squeeze and get them out there to flush them out a little bit. But one of the biggest examples that I have of you can't really believe, like, fundamentally, like, that stuff can take years to play out. Case in point is 2017. I remember this because I traded this pattern and I was so angry how it all shook out because we had this uncertainty around the French election. It was Macron versus Le Pen. It was, you know, Democrat versus nationalist or something like that. Macron ends up winning, but you can see the pattern already setting up. And by the way, this was when the Eurodollar was down here at 106. They were talking about the Eurodollar going to parity, especially if Penn wins the election, blah, blah, blah. But the market sets up oversold conditions with the bullish pattern. We had the election results over the weekend, and parity, 1.00, ended up going all the way up to 1.24. So that forecast of weak euro fundamentals and debt crises and all this other crap didn't matter at all. The pattern was a bull pattern. The pattern was right there. It was oversold. The election was the noise in the news that was just hard to discern. But it was easy to see what happened after the fact, and it was a bullish pattern that played out really nicely. So I'm kind of looking at this in the exact same way. Technically speaking, I have a pivot above at 1640, a harmonic merge at 1700. Even if this is going to go back down to 1.08 or 1.10, I see how it can do that, okay? But if this is wave 1, 2, 3, if we're trying to make like a fourth wave correction, this could be a fourth wave correction in here, and then the fifth wave comes later. So for right now, I'm just going to wait. I mean, if we have euro up from yesterday and then the dollar takes it right back down, we'll know that later today. We'll know that next week. Okay? So I'm still prepared for euro dollar to come down to 110, but, you know, no country is like exempt or immune to type, you know, fundamental issues. I mean, the US debt just crossed $30 trillion. That's not sustainable, right? So you can make an argument there like, oh, the dollar. It's like, again, fundamental gets very cloudy. You stick to the charts, you're going to be a much better Forex trader. So that's my opinion. All right. Nimmer, what's up, dude? Any chance pound New Zealand, Aussie New Zealand will drop anytime soon? We'll take a look at those. I am short on pound New Zealand. We took profit on the Aussie New Zealand long around 107 and 107 and change. Dollar CAD hit the daily harmonic wicket. Good to know. I really hate the FIFO Rufana. Well, I mean, yes. You can also, I mean, depends on your broker, but a lot of brokers now let you trade non-FIFO. If you're a U.S. trader, you can still trade non-FIFO if you use different trade sizes, which I tend to do quite regularly. So that can help. But yes, if you are stuck in positions, non-FIFO does hurt, but that's why it's important to know the break even. You know, I mean, if you know where your break even is, you can take losses, right? If I was in a trade where I was long, right? And this trade, let's say that price starts to go back my way. Well, if my break even is right here in blue, if my break even is here in blue, guess what? It's okay to close this trade, close this trade, close this trade, close this trade. You close them in FIFO order, still take your net profit, even though you have a loss, maybe a loss right here, but 2 wins, you walk away net profitable. So the most important thing is know your break even. And that way it's okay. You can take those losses in stride and know that your break even is still in profit. Okay? But yes, FIFO kind of sucks. And if you're a non-US trader, you don't have FIFO and you have hedging, you have a probably better leverage most of the time. But, you know, you got to trade within the rules you're given. Okay, dollar Swiss, we're good. Dollar yen. And Nimmer will take a look at that pound New Zealand for you in a second. And Aussie New Zealand as well. So 115.33. If anyone is interested in some, I think a really good trade opportunity on the dollar yen, it's right here. So I'm interested in shorting the dollar yen up here at 118. Right? I didn't draw the arrow very well, but I tried. Right here. And here's what I'm looking at. We have a really nice bar count that is now stretched out on the 200 the 200 EMA on a daily time frame. We are sitting at like 270 plus bars. Okay. Now, what I told traders for the last couple of weeks of this trade is I am ready for this trade. I'm waiting for this trade. But what I'm going to look for is ideally, I want to see if this price can actually squeeze higher and then give us more space to work with to trade back to the yearly pivot, back to this 200 EMA, and then we can short it at a really high price. So there's a couple ways I see this trade playing out. If I'm going to short this trade, we might see price come up and test the high, come back down, test the high, come back down, be sideways for a little bit, and then we have a push to the upside coming, and then it falls. And we actually end up getting a bigger pattern to the downside later, okay? The other one would be, and I don't see this necessarily playing out, was if we came down to the EMA first to balance, then I looked at this past resistance becoming support to buy it back up. So in a way that, you know, dollar's getting a little bit firmer today, if we end up taking out this recent high, I think this will find a way to drift up to this 117.50 to 118 level. I really like the sell trade up here, and I'm going to take it all the way back down, at least to this low, and again, back to that 200 EMA, wherever that is. So that will be my target as far as that trade goes if I get filled. But I told traders I'm not that interested in trading sideways. Okay, I'm not that interested in trading sideways because, you know, yen pairs can be really slippery, and they might, you know, make that little move higher, and everyone thinks like, oh, the top is in, but it's not. I think the better spot to sell is 118.50. You look left on this chart, go all the way back to 2016 and 17, and you will see that high that I'm talking about. I want to sell it right there at that high. Okay? So if that trade comes together, I'm going to have to wait a little bit, but it's one of those trades I'm stalking and planning and watching, and I think it's a good trade. All right, let's talk. Jeremy, 147.50 on the Eurocad, 47.50 Eurocad. So it's at 45.88. If I'm long Eurocad, which I'm not, if I'm long Eurocad, that yearly pivot is right there at 47.40. So yeah, you're right. You're right on. I mean, that's a good spot. I was looking a little bit more conservatively just to be safe because we're coming right back into this past support. Okay, that past support becomes resistance right there. If you're in profit on this double bottom right here on these equal lows, I think it's a great spot to protect your profit just to be safe. And if you get a trailing stop loss to run, then take advantage of that extra, 40, 50, 60 pips. But don't let this thing run back against you if you've got a nice chunk of profit on that Eurocad, my opinion. Right? So if I was already in this trade on these equal lows, I mean, that's 4,200 and nearly 46. That's a good trade. I would be willing to take profit now or just move that stop loss like 20 to 30 pips away, see if it runs. Okay, but that yearly pivot, you're right, 47.40 or so in that yearly pivot. Okay, good. All right, Nimmer, this one's for you. Pound New Zealand. We're trading at 2.0461. Another really good alignment. I am currently short on the Pound New Zealand, and I've been telling traders this for the last 2 weeks. My newsletter, the Pulver Report, this was actually my trade for the week. I was looking for a close below 2.0363. Okay, and on a daily time frame, or a 4-hour chart, I mean, you can see that we're starting to show a lot of indecision near the top. All right. I like this trade short. I think there's an amazing alignment. We have a couple of things that got me pretty excited to take this trade. Number one, we have divergence with overbought conditions. Number two, we have a really nice pivot alignment. We have monthly pivot still available, monthly pivot still available with a yearly pivot, and another monthly pivot still available. So I think it's a pretty good looking trade. Okay. Now, would I get super aggressive on this trade? I would not. And Nimmer, I want to ask you, so if you're asking for it to go down soon, how heavy are you on the trade? And I also want to ask, where'd you start shorting this one? So I mean, I talked about it. I was talking about like 2.02 would be a nice spot to short it. It kept going up a little bit higher. I have another entry sitting at 2.06. But just looking at the 4-hour time frame, I'm going to take a small position right now on it. I'm going to improve my break even just by a smidge. So I'm going to sell a smaller trade right here. And that's going to be a non-FIFO. So I'll build up this little trade. Now my break even's 2.0408. So here's my sell trade on the pound New Zealand dollar. I had one at 2.0368. I just added one today at market. I've got another trade up here at 2.06. And again, what I keep looking at is we just haven't broken the trend line yet. You know, so for me to add to this trade, I think we have amazing alignments to two spots. High probability target for me is when this thing breaks this trend line, we should have very little problem coming back to this high around 2.0050. All right. We also have a pretty amazing pocket right here at 1.98. So again, this is what I typically look for. I look for a very conservative profit level, and then I look for my ideal profit level. I would love to take profit inside this window on the pound New Zealand dollar. So if my break even is 2.04 and I can take this down to 2.01, that is at least 300 pips of profit that I'm looking for. Okay? So that's what that's what I'll do. And as far as adding to this, what I'm going to keep watching is if we go down to a 4-hour time frame and we're looking for a trend line break, has it broken the trend line yet in the higher time frame? No, it hasn't. So for me, I mean, look at 2.0350 right there. Eventually this, you know, if this jumps around and just bounces, but eventually breaks the trend line, then we'll go down, right? We have that pivot alignment. We have that 2.0050. We have that 1.98. This is my profit window from the bigger time frame. And, you know, where could I add to this? Well, if we end up bouncing around, we can consider selling an equal high again, or we can stack some sell trades to the downside and build that position up until those profit levels are hit. So I will probably be as, you know, again, keeping the trade size small, but keeping the target as conservative as possible. If I can build up a nice little position and take profit at 2.0050 and it gives me a 350 pip direction to work with, I'll do that, and I can turn it into a trailing stop loss and see if it goes deeper into that window. All right. Half a lot break even 201. We'll load to see when dropping. Okay, got it. So, yeah, I'd say this. I mean, if you're willing to test a little bit more, willing to, you know, bump up that break even slightly higher, like I said, as long as your break even is above 2.0050, I think that's fine. Ideally, I'm trying to target 1.98. I think even on the weekly time frame, and we talked about this a lot in the flex room this last week, the weekly time frame is pretty ridiculous. We have like 11 out of 12 candles that have been weekly bullish candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have 12 out of 13 weeks that have been bullish. So even if that alone is and this is just another kind of you know, convergence to add to it, like the evidence of a decent sell trade coming, you know, even that swing from low to high, if we pull back 23%, that's 2.0142, okay, which is just above your break even there, Nimmer. And then the 30% is 2.0050 or 35, and then 38% is just below 2.00. So again, look at my windows, look at my fibs. This area is a nice little safe pullback zone, past resistance, Fibonacci levels, and I want to see how it plays out. But, you know, 12 out of 13 weeks in a row is kind of ridiculous. We should have a pullback coming sooner than later, and I like the trade. I wouldn't be surprised in the next couple of weeks if this trade is starting to play out the way that we want. Okay. All right. Yep. Good stuff. And yeah, keep me posted on your progress on that trade. So, you know, I'm at 2.04 with a small break even there. A couple of small trades, you know, nothing too big. And then I've got another one at 2.06 just in case. And I'm going to change that one 2.06. I'm going to change the trade size on that to make it a little bit smaller. So that will be 2.06 pending sell. And move that expiration out a little bit. Okay. And then let's go to Aussie New Zealand. Aussie New Zealand is at 107. So same thing. Remember, where are your trades at? What's your break even? Traders with me on Aussie New Zealand, we were long in this one. We were long at these equal lows. We were long in this trend line break. We added our positions here. We took this thing all the way back to our pocket level around 107. We had a weekly harmonic as well. So we've been out of this trade with profit up here, which is a great spot. And now I know traders are pretty anxious to look for a short. So I think that this, as long as we don't invalidate, I say as long as price doesn't come above 108.50, then I'm looking for an opportunity to short this Aussie New Zealand on the right-hand side of the trend line. So it's still kind of testing this area and testing this larger channel resistance. Once we get over here, okay, once we get over here, then we can look at a stop above and try to take this right back down to channel lows. So that for the setup is I don't want to trade the Aussie New Zealand without a stop above 108.50. And the reason why is in the bigger time frame, this pair might finally be ready for a move all the way back up to 1.14. Okay? And the reason I say that is because this could be our larger swing, and we have a 1, 2, 3 wave move to the downside that produces the left tip, the right tip. And if we're going to have that push to the upside, this might finally have the ability to get up to 1.13, 1.14 like we had back in 2014 and 15. Now, I don't know that yet. This could still obviously dance around in the channel. We could hit resistance here, and we could end up sliding back down to the channel lows, and then we trade this thing again back to the channel highs, and eventually we look for a breakout. But the reason I would say if it's above 108.50, then I might look at stopping out and looking to stay long and scalping long and see if this actually has the legs to get up to these previous highs. All right? But right now I'm actively looking for a short position. I just want to see a trend line break. Okay, 1.0590. Okay, got it. So you got a little bit to go. That's okay. Yep. But we'll keep an eye on that one. Let's see here. What are your 10 or 5 best performing pairs? Philip, I never have an answer for that. You know, I mean, it depends on what my system or strategy is doing. Like, if I'm trading a robot like Perfect Storm, I usually have that robot running on 4 to 6 currency pairs that I wouldn't say they're the best performing pairs because they trade, you know, the robot trades them for me because they're usually really low volatility and they're really range bound and they're really choppy. So I don't personally like to trade that stuff because it's hard to plan those trades. But instead, a robot does a better job than I do of just, you know, taking buys off lows and taking sells off highs. You know, look, if you know my style, if you're in my trading room at all, you see that we'll do our routine every single day. We'll analyze, you know, every currency pair, and we'll try to find the best opportunity. So there's no default best performing currency pair. You know, at any given week, it's like, if this is a good setup, that's what I'm focused on trading. You know, I'm trying to pay attention to what's strong versus what's weak, what news is coming out this week, what could be the big mover with volatility. But for the most part, I'm just looking for good opportunity after good opportunity. Doesn't matter what the currency pair is. Okay. All right. Let's see here. Darius is pound dollar. Good morning. All right. You could have said good morning first versus request first, but that's okay. I'll let it slide. It is Friday. All right. Pound US dollar. Pound US dollar, again, if you're willing to take a stop above this recent high, I think pound US dollar is, you know, trying to head back down into channel lows. I would target this level around 3150 to 3200. But again, stop loss, I want to be up here just in case. Right? Because if it breaks higher, there's room to get back up towards 4,000 or 4,100. But I think if we stay in the structure, we stay range bound, then we'll see how that plays out. Okay? Now, a couple things before, we'll start wrapping up here in a little bit. I want to go into the dollar index really quickly. Let's go oil, gold, silver as well. 12,204. Now, even with non-farm today. Okay? Even with non-farm. Ches, I believe we protected profits on that one already. Pound US dollar. Yes, I'm out of this trade. So this is my pound US dollar. This was a sell trade right here. I did take profit near this low. It was just off my 2-to-1. I took profit. I said that already. We had about 150 pips in that trade. It is right here. So we talked about that in Flex. I turned off my robot after that was closed. 149. So I don't have the Wave Rider running any longer on that pair. Now, if you did not get out for there, like if you took this trade here and it didn't take profit, you know, would I hold it to get back in? Sure. Hopefully it's a break-even trade. Like, you're not going to lose on that position. All right. But if this is your stop loss and this is your take profit and it's not quite there, you know, you can close out for a few pips right now and then just kind of wait and see how this reassesses, or just let it trade. I mean, look, stop loss is right here near the high. If it heads back down, we still have channel lows. You know, let the trade work. But I did turn that one off because it was up 150 pips. I took it. Okay. So what I was going to say on dollar index is, has the dollar index really broken any structure? So we had a December range that gave us a fake break to the downside, a fake break to the upside. Now we're back in the middle. I don't know if I need to draw it this way and say, like, this is what the dollar index is doing. I mean, it's weird because in the context of this larger channel, you can see that the dollar index is just being really messy, right? I mean, this is a channel. This is clearly a bullish channel. We should be looking for some type of pullback on the dollar pairs. I mean, I think that the dollar in general, you know, has room to fall back into this yearly pivot. But that being said, because this trajectory was so bullish, I mean, it might be easier to have the dollar stay stronger going into the rate hike in March than it is to get the dollar really weak right now. But, you know, I'm seeing this. I'd like to sell the dollar up here, right? I'd like to buy the dollar down here. Right now, we're actually dealing with a lot of indecision, and it's just getting messier, okay? So the dollar right now is pretty messy. It's pretty tricky, and that makes it tough to trade. You know, I mean, the next big trade for me is sell the dollar up here or look for a decent pullback or a low that we can start buying from, and that's what I'm looking for. You know, and unfortunately today, like right in the middle, dollar gets strong on non-farm. Does that make it break the high next week? I don't know. But something tells me probably not. Like, we might just have this little flush down non-farm today, and then the dollar gets weaker next week. And part of that is also because, when we talked about this correlation, if the dollar gets stronger, that tends to do bad things to the overall stock market, right? And, you know, I'm not saying that the Fed is valuing the stock market over the dollar, but it kind of is. You know, I mean, there's more like sentiment riding on the stock market than there is in Forex. You know, so all I'm saying is, if the dollar gets stronger, that means that the 10-year note's going up. That means that rates are likely getting priced in for higher, you know, rate hikes, three or so this year, and the stock market's going to have a heck of a time hanging on to those historic highs. We've already had a flush out in January. We've already seen, you know, tech get smoked. I mean, we're starting to see this like disconnect in even the FANG stocks. I mean, Google was up to the highs. Netflix got crushed. PayPal got crushed. Facebook got crushed. Okay, I got Snapchat. I'm in Snapchat. Snapchat was up 60% last night after hours. Like, I mean, there is just tons of gaps and tons of volatility all over the place. So it's like, for the first time in a while, tech stocks and earnings actually matter. For the first time in a while. So anyway, that being said, dollar index is a little tricky. Dollar gets stronger. That's probably not good for the stock market. Speaking of stock market, yesterday was a pretty awful close, right? We had a big bearish close yesterday. Plus we gapped lower. We're opening pre-down at 444, so a little bit of a slight lower low. Dow is also pre-market down. Q's pre-market down. VIX starting to spike back up. I have chart alarms set on these volatility instruments. I'm also looking at the Russell. IWM. You know, we're well off the highs here. The fact that Russell's like one of the worst performing. Off the highs to the lows, we've had a 23% correction in the Russell. So currently it's around 19.4 because we had a little bit of a bounce there, but over 20% off the highs as far as like correction, potentially bear market territory. It's really interesting because we have crossed the 200 exponential moving average. I want to see what we are on the weekly chart. Are we getting the death cross? So we have a line in the sand here on the Russell with that 200 EMA. So if we're going to stay supportive at all, it's like now or never. Otherwise, this Russell's going into some severe bear territory, and we're talking about moving right back into these pre-pandemic crash levels. But if we have, this flush down, we bounce up here, can we overtake this 211 level in the Russell? Small caps are always pretty interesting. I think small caps might outperform large caps this year. I know value is the sector that I'm focused on right now. Okay. Look at that. Nimmer bought Snap right before market closed at 25. Awesome. So I played Snap. It was kind of interesting how I played it. It's going to be, I want to see how it plays out today. Pre-market's 35.14. We had highs. So here's what I have. I have a credit spread on Snap. I did the 37 by 34 bull put, 37 by 36. And then I cashed in a long put at $6.90. So overall, I have 50 cents from the credit spread, $6.90 from the long put, which actually, if I take assignment on this, I have enough credit that my actual break even, if I took assignment on Snap, my break even on this overall, let me bring the calculator up, it's like $29 and change. So my assignment will be 37. I collected my 50 cents on the credit spread, and then I collected $6.90 on the long put. So my break even's $29.60. So even if I get assigned on Snap, my break even's $29.60. If it stays where it is at $35, then next week, okay, I can close out for $5.40 a share. And I've got, a few hundred shares in it. So, I could turn Snap into a pretty nice profit. I really don't want to hang on to it that long. I am, of course, very curious how the market reacts to today's, open. Does it flush back down? That's a pretty massive swing because Facebook was dragging everything with it. So Facebook dragged PayPal down. Facebook dragged Snap down. Okay, but if this somehow recovers at 35, and I'm just wondering what this does. Right? Like we have gap to the downside, gap to the upside. It might just flush right back down and fill that gap. So I'll see where it closes today. I know my break even. I don't mind this one being a little bit of a pop to the upside. But if I can close it for, $4 or $5 profit, I will probably end up doing that. All right. I was just kidding, Philip. Just kidding. All right. Any other? I saw Euro Yen. Yep. Jerry's asking Euro Yen. Sure, we'll do Euro Yen. So Euro Yen, yesterday we talked about this one just continuing higher. It's been on a pretty good tear since ECB yesterday. I just haven't loved the lack of support or resistance that we've been trying to trade it off of. So as an example, I wanted to short it at that resistance and we had to settle for a slightly lower entry. Okay. So we did have a sell trade in the trading room here. We had a buy trade in the trading room here, but I didn't get the sell trade at this area. And I did get a buy trade. This is during the holidays. You had to get a buy trade in here. But again, it's like I want to sell it high. I want to buy it low. And neither of those levels were hit. So it's been sneaking off those highs and lows. And that's been frustrating where I haven't gotten the trades. So what I'm looking at now with the current run on the Euro Yen is I would just look left right here. And there's my resistance. Possibly this resistance as well. And I think that this can run in a probably an aggressive line. We might have this push, a little pause, little push, little pause. But once we come back up to like 134, I would be looking for a chance to short this right back down where it started, find some pockets on the ECB breakout, take it back down to channel lows. And this just becomes resistance up here to support down here. That's all it is. So right now it's like if you're like, I need to find a trade in Euro Yen, then I would be looking for scalping systems to be bullish. And take that up as long as it's going to stay bullish towards 133.50 or 134. So don't fight the path right now, but if I'm interested in shorting it, it's up here at resistance. And then we short it back down to the ECB pockets. Okay. All right, that's my outlook on Euro Yen. So we've covered a lot of currency pairs this morning. Session's been going 45 minutes. I like to keep these, not short and sweet. We obviously go 30 to 45 minutes most of the time. I do have some expirations that I'm sharing today in Equities on Demand. We have Alcoa, BlackBerry, ConAgra, Katera Energy, 3D Systems, International Paper, Snapchat. Got a lot of good trades running. It's going to be interesting to see what the market does. We have all major indices down for the day. Volatility's up a little bit. And non-farm numbers, again, the market interprets this stuff really weird. It's like if non-farm is up, rather than it's like dollar strength, oh my gosh, dollar strength. It's like, well, if dollar strength is going to be what happens in the market, that's not going to be good for the stock market, right? If job numbers are like, well, that means the Fed's definitely going to raise rates. The market probably hates it. But at the same time, it can be totally twisted where it's like, economy is strong, we can tolerate a rate hike, everything's fine, risk on. It's just like the market looks for way more excuses to be skewed and biased to the upside. You know, anything that's like sign of strength is great. But I will say this. I think that the tech sector is not the place I want to be. And I have some exposure. I mean, I am in Square or Block Inc. now. I'm in Twitter. I'm in Snap. I'm in Facebook. I'm in Google. I'm in Netflix. I'm in Microsoft. I mean, I have some tech exposure. And those like longer term, I'm not even worried about. But near term, I mean, if you want a good example of near term, here's one. ARKK, ARK Innovation. This is Kathy Wood. This is ARK Investments. This is an ETF. This thing is down and just getting its butt kicked. And it has been. Okay, and again, this position is a lot of disruptive tech. This has Teladoc. This is Tesla. These are, these wildly bullish stocks in the next maybe 3 to 5 years. And I say that like, there were literally in earnings here, there's like trillions of dollars that flew into, if it's not like a trillion or so, it is hundreds of billions that flowed into ARK in the last like 2 years. So we're down 60% off the highs. Right now, this is what I want to show. To be down 60% in the stock price means you have to recover 140% to get back to the highs. So the hole that technology has dug is very deep. All right, having a 10 or 15% correction is one thing. Having a 20% correction is one thing. But when you have a 50+% pullback, a 60+% pullback, the odds of getting back to these highs get slimmer and slimmer. Or the time it's going to take to get there is going to be much, much, much longer. So I do see there being a relief rally to some extent. This is a swing. We have an X, A, B, C, D, and we have a nice little harmonic pattern right there. I could see ARK coming back into this area around $100. But I'm in ARK, okay, and my break even's like $80. If I get this thing to $100, I am getting out of this trade with a $20 share profit. I think there's enough volatility in tech to give us some of those pops and relief rallies, but I'm not planning on these highs coming back anytime soon. All right? So again, if you're willing to hold, you got to be willing to hold. If you're looking to make some money in tech, you're looking at this like near-term relief rally. That's about as good as it's going to get right now. Otherwise, be in value, right? In fact, on my YouTube channel, it's a 2-minute video. You want to see what I'm doing this year in my equities on demand for Q1? I'm in energy, I'm in financials, I'm in staples. That 2-minute video shows you a free way to do it. Use a scanner, find value plays. Those are the stocks I'm focused on. So, not that hard. It's right there. All right? Any questions for me? Happy Friday. Okay, we've got class coming up at the top of the hour for Equities on Demand. Thanks for being with me today. Any issues with AV today? Pretty easy, right? Like, I mean, I'm using software to do this, so I'm not just using the dashboard of Restream. I'm posting this. It should be on Facebook, should be on Twitter, should be on LinkedIn, should be on YouTube, of course. And I think there's one of them. Twitch. Hey, Twitch. My Twitch streamers out there. They're like, dude, I thought I was watching Fortnite. Anyway, have a great weekend. Happy Friday. All right, Equities on Demand traders, I'll see you at 10 o'clock. We'll wrap up, get our expirations going. We'll monitor our prices for the rest of the day. And I know I have class today also at 1 o'clock. Anybody that has my Wave Rider system, we have a class at 1 o'clock today, another live application. Let's try to find some good trades. We might have some deployments coming on the Euro pairs. The Euros had a big jump since ECB yesterday, but I think there's room to run, so we'll take a look at those this afternoon in class. That's at 1 o'clock today. Okay? All right, sounds good. Have a great Friday. Have a great weekend, and I'll see you back here. We'll be back for the Pulver Report on Monday live at 9 a.m. Okay? But good stuff today. Have a great weekend. Nimmer, awesome to see you. Everyone else, nice to see you. Equities on Demand, see you at 10. Bye-bye. Happy Friday. Bye.